So I recently made the video about Stellantis and everybody hates it now that the stock is down 62% over the last year. It is the most hated stock. But let's discuss extrapolation bias, which is very key when it comes to investing. So Stellantis, as said, is down. I discussed it a few times on my channel and you'll see the comments. We go to the most recent comments: car industry, don't invest, would not invest, a significant amount of that. Many of them are just cheap, junk, nightmare, things like that. Spinning off some brands, spend too much to acquire other businesses, then they puke it out, things like that. Stellantis is a dead company, an empty shell. I wouldn't take Stellantis for free. Not a good idea to do it now. They're a company run by accountants. Worst quality cars you can ever try. Supply chains, short report on them. It's ugly, ugly, ugly. And I make a title just to rattle feathers that it is getting interesting. But okay. And this is a video from 3.5 years ago, where I said, don't watch this video if you like Stellantis. The video was made here. The company was in an uptrend, and keep in mind the stock went up another 70% since I made the video. You were wrong about Stellantis because the stock was up. This is at the peak. When do you think you will be right about Stellantis this year? Well, I hope to be wrong again. I commented I was right just a year after. This was from 3 years ago, buying 100 shares, update, Nelly was fried, frittata, I'm an idiot, too much, too good for here. So I'm not sure I agree with regards to Stellantis. Again, from 3 years ago, they pay a great dividend of 8%, strong financial, consistent paying down debt, improving cash flows, everything looks good. I've been investing in Stellantis from a valuation perspective. Stellantis seems one of the automakers, greatest balance sheet, everything. Sven didn't take time on this. PA ratio is 2.75, everything looks good. Look at everybody, thumbs up this comment. That's something. The analysis of Stellantis is superficial at best, and results of the company are showing it. It's not superficial, just my opinion, where I dig as far as I have to go. And thank you for the idol, but I need to do deeper analysis. Whenever somebody disagrees, then there is a deeper analysis. They were very ambitious like they are now, but again, this was a nice comment and divorced from reality. So even then, there were some comments, but they were not as bad as those are now. And here, your Stellantis analysis is absolute garbage. Debt offset by cap position, P ratio is free. Please check your decks before releasing such a bullshit analysis. Should have written, don't watch if you like serious analysis. And now I say, hope all is good for life. These comments are too good to be true, and also on my research platform, when a stock goes up for 2 months, 3 months in a row, everybody starts extrapolating how much more room there is for growth. When a stock goes down for 3 months, everybody starts commenting under each analysis, what are the risks, what is the management doing, Sven, are you sure? And all comments are focused on risk when it's bad. When it's good, all comments are focused on how much money we can make. Further on YouTube, if I say something about a stock that is good risk and reward, it goes down, I am suddenly a snake oil salesman, a scammer, I should do the research. The key comment is I'm doing superficial research. I do research until I know enough. And then if it's too risky, I go next. That's value investing. Good stock, I get the tanks, great, this or that, and things like that. So that is the extrapolation bias that I think is key when it comes to investing, also understanding it, and how the movement in the stock price gets you and your emotions. Because we tend to extrapolate current trends into the future. Now, stocks are only going up. For the last 15 years, it has been all good. Stocks always give 15%. Trust me, here, especially in the period here. When I was buying, I would get my salary here and I would buy something. And then I would try to survive the month by doing other things. Nobody wanted to touch stocks. The local community forum had 20,000 members online here. Here, we were 20 of us. That's how always what happens recently is extrapolated. Everybody thinks that we can borrow in eternity because all good, we can just borrow because that's how it goes. But nobody checks the fundamentals. What to do on extrapolation bias? Make money on it, don't lose on it. And how do you make money? You buy when there are fundamentals. This is Archer Daniel Midland's cyclical stock. And a year ago I was telling it's a good one, 51 years of dividends increase and you can retire on. The dividend yield was 4 or 5%. It was good, a good buy. Now people are extrapolating where food can go. But here they were, oh, it's such a bad company, even if you use and eat and go to the toilet with their products every day. So it's not about just being a contrarian. No, it's just about looking at fundamental value bottoms. When that stock hits rock bottom from a fundamental perspective, are you happy with 5% dividend yield no matter what? Then you start buying. And then you don't look at the trends or this and that. You just accept it, enjoy it. When the trend reverts, you make your money, enjoy life, and that's it. Because now it's different. The yield is 3%, which is not close to 5%, where I would say, okay, this is now a bottom. So I love your comments, but I have to take them with a grain of salt. And the best time to buy something is usually when everybody hates it. That's why I put Stellantis here on the quadrant just to rattle you up. Unlikely I'm going to buy Stellantis, but when you look at those things, you understand the risk and reward. However, I'm just not investing in automakers, but now it is a better bet than it was in all the 5 years that we have been looking at. Domino's is down, all these companies here are down, and we just need one to do well. Because at the end, we discuss here the good, the bad. No matter what the trend is, we note that long term we try to keep our objectivity by sticking to the long term trends. And at the end you just need one good stock every year, not 20. So, hope you enjoyed this video. Remove your emotions, don't extrapolate neither the good, neither the bad, and I'll see you in the next stock analysis.